it's a great pleasure and honor to lead this panel on green venture capital and the new hot sectors. My name is Philipp. I'm a partner at a small investment bank, and we support young companies from their growth stage to exit or IPO. But let me quickly introduce our panel today. Helge doesn't need much of an introduction. You've all seen him on stage a bit earlier in his fantastic presentation. Only for those who were not in the room, I will quickly repeat. He represents Emerald Technology Ventures. They are based in Switzerland and Canada. They have about 300 million under management, and Helge is their waterman. He conducted research on water, led water projects, some of them in Ecuador, and now he is the sector specialist on water. Welcome. Then we have Alexander. Alexander is the CEO of Sonne+Wind. Sonne+Wind is a publicly listed company, very unusual in the VC market, and they are listed on the German entry standard. If you want to participate in the Cleantech investments and do not want to become a limited partner in one of the big companies, then go and get some shares, and they are fairly inexpensive at the moment. So they focus on energy from production to storage and efficiency. And Alexander himself, he studied business and engineering, gained some industry and consulting experience before taking the lead at Sonne+Wind about 8 years ago. He is a Berliner. Welcome. Sebastian Becker, he is supervisory board member at the new kid on the block, MAMA Sustainable Incubation AG. MAMA stands for a new approach, and we will talk about that a bit later. Sebastian studied political sciences, Chinese and communications, worked as a journalist and consultant, and now he will support MAMA's new portfolio companies not to leave the path of truth and sustainability. Welcome, Sebastian. Olaf Jacobi, he is a partner at Target, represents Target Partners, a Munich-based VC. They have about 225 million euros under management and serve mainly the German language markets. The great thing about Olaf is that he's been an entrepreneur himself, so he knows both sides of the business. He has built and sold companies, so he's a good man to talk to if you're an entrepreneur. Welcome. Now, in these Twitteristic times and at 5 o'clock in the afternoon, 1.5 hours behind schedule, everybody's a bit tired, I suppose. Your attention span is down to Twitter standards as well, so I asked the panel to introduce themselves in their own words in no more than 140 letters. Please go ahead.
Okay, I'm an engineer that enjoys social interactions, got stuck in venture capital and is happy with it.
I always start with a quotation from Mahatma Gandhi, be the change you want the world make. My first question is a replique. What did you today for change yourself?
I would say MAMA is not only providing venture capital, but also wants to accelerate our portfolio companies.
Yeah. As a serial entrepreneur, I changed the sides of the table and joined the dark side of the force, trying to make it a little bit easier for entrepreneurs with my experience.
Back in Copenhagen a few months ago, we grabbed the domain Dark Side Ventures, so perhaps you want to get hold of that. Typically, you are used to companies pitching at you. Sometimes there are really hot startups out there, and VCs have to pitch themselves to the startups. So what I would like to know from you is what makes your company special and why you are better than other companies to talk to as an entrepreneur. Who wants to start?
Okay. Well, I think we are special because we are a very experienced cleantech investor in all three areas: energy, materials, and water. We have a very large team which contains of a lot of, let's say, technical know-how as well to mirror our large corporate investor base. So through that, we have a very valuable interaction that I think is necessary in the clean tech space. And after all, we have the funds to invest in companies to grow to a decent stage.
Yes, Sonne+Wind is very special because we are since 2000 in the field of clean tech, and we do nothing else than clean tech. Since 2 years, we participate in companies with a minority stake of minimum 25%. And what's very special is we are so small. Sometimes we are smaller than the companies we invest in. So if I hear about 300 million or 120 million fund, we are kind of evergreen fund, and we did invest 8 million euro. And so to get a minimum diversification, we have to invest in very small positions, and that's a position that makes us unique in Germany. There is no one in this early stage field with such small amounts of money. We start with 200 kilo euro, and the maximum in the first round is 500 kilo. But with the small amounts, we have a good deal flow that comes from the KfW, and that comes from all the other public companies, because public money in Germany always lead a private lead investor, and I think we are one of the very few private leads in Germany.
Since we're the new kid on the block, we can avoid all the mistakes the colleagues have made over the past 10 years. No, just kidding. I think it's not about being better because we're in the same space, and the space has to grow. So everybody can benefit from everybody that is active in that field. Of course, we want to do something a little bit different. We have a hands-on approach. Our core team consists of serial entrepreneurs, which have extensive networks, so we want to leverage that. And so I'm happy about every colleague, every startup, and every journalist that is here, because, yeah, it's growing.
And still, your philosophy is slightly different from what we've seen in the market so far. Would you like to talk about that?
Well, there wasn't that much to see so far, but of course it's not only about raising money. I think everybody that is trustful and has a clear picture of what you want to do should be able to raise some money. And if we look at investments or possible portfolio companies, they can be found if you dig hard enough or deep enough. But it's not only about investing and making profits possible for your investors, but also to help these companies to make a successful market entry. So it's about raising the general level of awareness by doing PR, by helping companies to avoid management mistakes, and by helping them to find markets. So it's, let's say, a holistic approach, although in a not very esoteric way.
And what exactly is sustainable incubation?
Well, typically, incubation is a bit difficult in this context, because typically you think about some company setting up a technology park and then renting offices out. That's not what we are doing. So we kind of prefer hands-on approach to help our companies to flourish, and incubation is probably a little bit too much in this context. But of course, since we're in the early stage, it's about to help these companies to grow and to prosper.
Thank you.
Target Partners is located in Munich, and we are predominantly investing in German-speaking countries. As you guys know, Germany is really the land of venture capital scarcity. That means there's not that much money available for startups. And the first question is, or was, what is different between venture capitalist A and B? And I think most importantly, for an entrepreneur, especially in the clean tech or green IT sector, is you should have an investor with deep pockets, because you're not a web startup. So we are in Berlin today, and this is really the center of gravity of web startups. And the capital, let's say, requirement of clean tech startups is, I don't know, maybe 10 times higher, 20 times higher compared with a web startup. You need an investor with deep pockets. And I think this is the biggest difference. You should double check how let's say how much money your investor has.
Okay, who in the audience is an entrepreneur? Hands up. Who is looking for money? Okay, quite a good number. Would you mind to explain these guys who exactly, or how exactly they get your money? What's the process?
Normally it's a wire from the bank account.
No, honestly,
this process is quite different, or can be quite different. First of all, you better should know somebody, whether from Mama or Target Partners or all the other ones. It's much easier to approach us if you know one of us or an entrepreneur we have funded. So there's a statistic in the market that I would say 70%, maybe 70% of all the investments which are taken are proprietary. That means it's not the sehr geehrte Damen und Herren, dear Madam and Sirs, here's my business plan. So normally it's a proprietary deal flow. And get contact to a VC through your business angel or through your network and then pitch. That's much easier, and it's easier to listen because all of us, we see thousands, hundreds or thousands of deals per year, and sometimes it's better to have a direct approach.
And what's the ratio last year for deals looked at and actual investments?
You know, deals are coming in waves, like if you do surfing. Some years you don't invest, and sometimes you invest in 2 months. So last year we have invested in 3 deals, 1 green IT deal, and we have seen, let's say, 1,000, 1,200 cases.
So I think the market average was 1 to 2% of the...
Never, ever. Not percent.
That's what I heard. Okay, there are different figures in the market.
Mil.
Okay. No, that's what I heard before. Fine. And with you?
Well, honestly speaking, last year we have done a number of investments, but all of them were follow-on investments.
Okay.
And I think that's one of the dilemmas that some of the larger funds faced last year. We are an active, or we pride ourselves to be an active investor and a large investor. That means you have a large portfolio and you have to be active on a large scale. And in times like last year, that meant more work, more dedication, more follow-on investments, uncertainty with regard to valuation of new investments and so on. So that all led to the fact that we didn't invest last year, which might tell you how desperate we are to invest now.
So VCs are catching up to reach their quotas. Now is a good time to meet them.